Good morning, everybody. Welcome to the Flow Show. It's Central Bank Week, Big Data Week. Everything going on this week should be a busy one. Hope you're all ready and ready to rock and roll. Morning, Kay. How are you, mate?
Hey, morning, Ryan. Morning, everybody. It's gonna be a big week, right? There's so much happening. Bit of a quiet start today, but it's going to accelerate, right? I hope you had a good weekend.
Yeah, very, very much so, mate. Nice, quiet one, actually. Fairly quiet one. So,
Oh, it's good
yeah,
for a change.
yeah, nice to recharge the batteries for a bit. But yeah, Monday is looking a bit quiet at the moment. So it'll give us the perfect opportunity to get set up for the week ahead, which is what we shall do. Right, let's crack on with what has happened before we get into what will happen. China is in the midst of all its seminars and leaders meetings and everything going on at the moment. So there's been tons of comments coming out of that. Nothing that's too market moving at the moment, but it could be the end of all these meetings where we get the big news drop in over what they're potentially going to do. They're talking a lot about further investments and stoking the economy and whatnot. Nothing too much deviating from what we've heard previously. But as I said, the end of these meetings, we might get something a bit more substantial. Over in Japan, there was some rumours out this weekend that maybe the government was going to announce the end of deflation in Japan, which is quite a big deal for those guys. It's been touted for a while that they may come around to that line of thought. But then Japanese Chief Cabinet Secretary Hayashi said that Japan hasn't escaped deflation at this point. So that put a bit of a pin in those hopes from the market. Over at the Bank of England, BOE's Peel says, in my baseline scenario, the time for cutting the bank rate remains some way off. So pushing back some expectations there for when the BOE will cut rates. Says he's not convinced weakness in activity is really creating disinflation significantly, and that the normal level of interest rates will be somewhat below where we are now, but not at the average of the last 15 years, which pretty much been close to zero. Coming over to some data, some morning data out of Switzerland, which I'll get Kay's thoughts on. CPI data out of there. CPI coming in a little bit stickier than expected, up higher on the month, up a bit more than expected on the year, though one down on last year. The EU harmonised number, which isn't printed there, also came in as expected, 1.2, which is a dip from 1.5 year on year. The monthly up a pip as well. Kay, what news from that CPI data?
Well, we've seen like the overall picture, right? A little bit stickier than hopes for it to come down more. But it's still, as we've seen for most of the other data as well, it's still coming down tick by tick. Not going to change much to the actual. There's been some pricing of S&B possibly cutting this month, right? But just because they only have like a quarterly meeting instead of the other ones having like more frequent central bank meetings. And of course, the speculation about Jordan throwing in the towel for September has seen some speculation on the Swiss franc as well. But so we had this, it is coming down, right? So we are well within their range. It doesn't really change the picture too much for the Swiss franc right now. We had, as you're showing, this immediate reaction on the little bit stickier than expected number, but it's relatively, well, important or interesting at least that Euro Swiss is holding around at 95.5. You see that prior top. I also have a bit of a trend line coming in there. So that's the interesting thing, and we're back basically where we started before the CPI, which is, in my opinion, just logic. Swiss should, in my opinion, remain still a bit under pressure, and we could see some more speculation build up until that into that SMB meeting later this month. The other one, which I will show a little bit later, is showing a slightly different picture, and there's the dollar Swiss, but that's because that is finding resistance. That is really finding resistance up in the up close to that 89, the figure zone, 80, 88, 80, 80, 89, the figure. That's where it now caps, and that's more to do with dollars, but also it's a pretty big technical level, and that really would need to go for the dollar Swiss to push up.
Yep, thank you, mate. Right, Germany. Apparently they found some fiscal change down the back of the sofa because they're going to apparently be preparing a 7 billion tax package to spur growth over there. One of the big negative economies at the moment, Germany, the so-called growth engine, is really spluttering on the side of the road at the moment. So yeah, some 7 billion they're going to find in tax cuts from somewhere, as they always tend to do. Coming over to other data, and we'll just look at what went on. Oh, give all that crap. What went on last week, last Friday? Obviously, some big, decent data out in the manufacturing sector. Kicked off with the final S&P number, which came in better, 52.2, so much improved there on that one. Canada as well, a little bit of an improvement there as well, 49.7, but remain in contraction. A bit of a theme going on in these manufacturing PMIs, showing a bit of an improvement, even if they're not getting into positive territory. Then we got the ISM, which was a bit of a shocker, went the other way. That fell further into contraction, 47.8 there. Was expected to rise 4 pips, ended up falling quite a bit there. Prices paid coming down a bit as well, but still in expansion. New orders negative, employment further into the negative. So not good numbers from the ISM. We do get the services numbers this week, and that'll be the bigger one to watch. But still not looking good from the ISM number, particularly those employment numbers are going to be watched closely for ramifications for this week's NFP. Over on the consumer front, the Michigan number actually dropped much further than the flash number. So that was a big negative there, 76.9 for that one. You don't often see such a wide revision in that number, and things coming down in all the components there, which is just adding to the little bit of consumer weakness we've seen in some of the various numbers. Durable goods last week, the retail sales for January, the conference board consumer confidence, now the Michigan. So there's just a few more warning flags popping up about the US consumer at the moment. Obviously, can't take 1 or 2 reports or 1 month reports as a precursor for any doom coming, but when you start to get all the sort of different numbers pointing the same way, it means you need to be careful, need to be wary that maybe something is brewing. As I said, that services number that we get this week is going to be important. Also, the ADP we get. Keep an eye on that one, not just so for the headline number, but for the components, the sector components, things like leisure and hospitality, retailers. If we see some weakness in those jobs numbers, that's going to filter into what we're seeing in these consumer numbers. If consumers aren't spending, then retailers will be looking to cut costs, leisure, hospitality, cut costs, and that usually starts with job losses. That's on top of all the minor layoffs that we've been seeing of the last few months picking up as well. So we'll look for the Challenger Grey numbers this week, but I'll go through the calendar in a bit. What did you make those numbers on Friday, Kay?
Absolutely, Ryan. You're spot on there. And I even took the time to go into the chat room over the weekend because I've been like reviewing those things a little on the Saturday morning, and I find it's not red, but those flags are not blue anymore or green anymore. It does seem that there's some slowing starting to creep in, right? And it's going to be, therefore, a very interesting week because indeed these services are going to tell us quite a bit. And again, so you've got two things here. You're talking about a consumer, and then you're talking about the employment index. And we are going to have a big employment week this week. If we ever start to see some weaknesses come in there, that's one big domino, one big pillar also why the Fed is holding rates steady where they are, and it's buying them time because the consumer and the labor market have been so resilient. If we start to have a bit of more orange flashing lights there, there may be, I think, some damage is perhaps a big word, but at least a rethink. We need to rethink a little bit all of this. And I've been a dollar bull for quite a long time, and the dollar isn't dead by any means because we always have to look at what's happening on the other side of the medal. Especially in Euroland, nothing is great either yet. But where we see perhaps embryonical green shoots, what Lagarde was also saying in some areas in Europe, it seems that in the US we may, and it's a big conditional thing, of course, on the data upcoming this week, we may start to see some orangey flags there, and that could make the market start to think, well, okay, there's maybe some rebalancing to do here, and so therefore this week's data are going to be mega important in my opinion.
Yeah, no, absolutely. And then it is going to be important. I'm going to watch a lot of these data points, the services, the ADP, the Challenger Grey layoffs, as I say, not just for the headline numbers, but for the components. Because if I see further signs that the consumer might be on the wobble, that's going to potentially flip the trade for the Fed. Because we've just spent the last couple of weeks expectations finally coming down in line with the Fed, and yet now we might start seeing some data why there's justification for those to get a bit more dovish again. What will that mean for trading? It means likely that if confirmed that there's some issues, then the dollar is going to move into a firm rally sell mode. So any good data most likely will be hit, but it's going to be a huge messy week because we've got all this data. We've also got Powell speaking twice at testimony this week, and there's a story out that I put in our newsroom over the weekend. Just some market expectations, thinking he's going to be quite strong in the not ready to cut rhetoric, which might go at odds with some of the data we're seeing. So yeah, pendulum is swinging, folks. It's going to be a big old week, but yeah, there's certain bits and pieces you want to keep an eye on. Right, let's crack on with what else there was. University of Michigan covered that. So Barking was out, Fed's Barking, saying that there's still in a world that firms are increasing prices at higher than normal levels. Says price hikes are being offset by declines in some sectors. He's had the broom out as well over the January data, saying they try not to look too closely at January inflation data. Overall inflation numbers are likely to come down over the next few months, but if monthly numbers come in inconsistent with that, we will have to take that into account. We'll see if there are any rate cuts this year, and it all depends on the progress on inflation. Fed's Goolsbury, another one with a broom, wouldn't be surprised if January inflation was just noise. Bostic says he's grateful for inflation progress, but the job is not done. Wants to see more evidence inflation's returning to normal, and says he doesn't want to have to raise rates again. Maybe a sign of worry for him as well. Fed Kugler said the Fed is laser focused on bringing inflation down to 2%. Congress apparently has cobbled together a deal that's going to fund the government through September. So that's when the can's going to get kicked forward to then. Oh, chickadee boo. Right, that's all I've got on the headline front. Kane, if you got anything you spied else over the weekend?
Just trying to run through it again. No, well, a few articles about Hunt's UK budget upcoming as well, Ryan.
Oh,
Yeah, I know we're still a couple of days away, but perhaps that's something that the market want to keep an eye on as well, because the expectations are that Hunt's budget, if there is some fiscal spending, could be a bit inflammatory for the inflation, and therefore hold the Bank of England back from cutting earlier. There doesn't seem to be massive room, but it does look like the early week market is leaning a little bit to that side. So that's going to be, I guess, a mover for the well, not I guess, I trust a mover for the sterling as well this week, right?
Yeah, even as we speak, there's a headline just popped out that the UK has announced 360 million investment package for R&D and manufacturing. Yeah, we got the. I haven't looked fully into this budget stuff. You have to remember it's an election year, so if they're going to find money down the back of the sofa as well, like Germany, this will be when they do it, and this will all be with an election slant ahead. I doubt it's going to do much to change the picture for the election, but you know, we might see the market taking a favourite tone. There's probably going to be some tax cuts in there, lots and lots of spending plans. I'll tell you that for nothing. That's what will come. But we'll get into that in more detail, and I'll look into that at some point if I can be asked. I really don't give a care for it at the moment, but if it's market moving, we have to know what it's all about. So let's have a quick butchers over what's coming. Not a lot today, nothing else for the rest of the day. Tomorrow, the final services PMI numbers from around the world, including that ISM that I mentioned later in the day. Tomorrow, Wednesday, we get Aussie GDP. Keep an eye on that, and we've got a fair bit of China data out this week as well, culminating in the CPI numbers on Saturday. Their expected year-on-year numbers expected to move up into positive data after 3 months of negative numbers. We'll see whether that's the case. Eurozone retail sales might have a little something to say ahead of the ECB, which we've got. ADP, again, important to keep an eye on. Bank of Canada kicks the central banks off on Wednesday. More jobs numbers, JOLTS coming in as well. Another one to keep watch on. Oh, blimey, it's looking a big one. Challenger layoffs, as I mentioned, that report to keep an eye on. Jobless claims we'll need to watch as well after that uptick in continued claims last week. Consumer credit, again, something for the consumer to focus on. Have we seen an increase in borrowing? Are things getting a little bit tight over there, forcing people to take a bit more credit? Then into Friday, NFP day, obviously. That's going to be the big number. It's double bubble with the Canadian data as well. So we're going to have fun for the loony on Friday. Oh, blimey, Kate. It's like it seems like one of these weeks where it's too busy.
Yeah,
And,
exactly. I think we need a bit of a lie down today to be in top shape for the rest of the week, because I don't see it on that calendar there, because we have 2 days of Powell as well in the mix there, on the 6th and the 7th. And then in the meantime, yeah, you were talking about those Chinese data coming up. We have the whole week, we have the NPC ongoing, right, over there as well. So there should be a headline avalanche coming out of China as well during the week. So we better have lots of coffee and be sharp for the rest of the week.
Yeah, very much so. But I mean, seriously speaking, traders, when you get weeks like this, it's really busy. The market can be flung around all over the place. It's again one of these weeks where you can't see a move starting on a Tuesday and think it's going to continue for the rest of the week. It can get turned around, flipped around all through the week. So this is another one of these weeks where see where we are at the end. It doesn't mean there's not going to be plenty of opportunities to trade it all the way through, but for the bigger picture, the wider picture, we have to see where we are at the end of it all. Have we broken levels? Have we broken to new ground? Or are we stuck in the same old ranges? So that's your wide view and your short-term view. There's enough going to be plenty for everyone to trade in the middle here. But just, as I say, wait to see where we are at the end as well. Right, let's have a look at some prices then, shall we? And see what's going on in markets. As mentioned, not an awful lot at the moment. Euro dollar ticking back up, back into my old zone here. Still trying to work out what he wants to do. Held this 108 level nicely in the end last week. It's not out of the woods. We're only 50 pips off it. I was getting a bit concerned about the amount of times we were coming down here, but it's proved its worth again. So we'll see if that continues to play ball. This is going to be good. Again, we've got the ECB this week, so it's going to be interesting. Are they going to give us a bit of a timeline on cuts? Are they going to push back against any dovish expectations and keep the jobs not done rhetoric in? So again, if we test down here over the ECB and we haven't broken the 108, then again, that's going to give a bit of conviction for longs to try it off that level again. Conversely, are we going to get a move up to 109, and what will the sellers be doing up there as well? So we're in this range. We've got the levels to watch, got plenty to play in the meantime. And that's just looking at the ECB side of things. Cable, again, not doing an awful lot, really having a bit of sideways action here. It's not often cable goes sideways for so long, but I don't see any reason why it should go anywhere at the moment unless something changes either for the UK or for the US. So again, that budget stuff, potentially look at your range edges. That's the one low 125s up into that 128s, high 127s, 128s. If we test and can't break those levels over whatever news is thrown at us, then it gives you the potential for some decent range trading. Euro sterling is one I'm going to be looking at over the ECB, I think. Maybe if we get another move down to this 85 level, and again, doesn't really look like it's going to break. I'm going to be thinking potentially about longs down there. Top side, still can't get above this 85.70. So until something changes there, another one going sideways for that. We have had some breaks though on Friday. A bit of a wonky Friday. I never like breaks on a Friday, but gold decided to make a move pretty much all the way through that previous highs, that 2075 area, went through pretty much without a blink, and is sitting pretty up against the highs we saw back late December, around 2088. We're not being able to get through there just yet, but we're not dipping back too far from that level. Kay, what's your thoughts about this gold move? It's not really a risk move.
Yeah, and you know what? And it's a bit funny to say. Okay, we saw the setback in the yields. That is supportive. We saw the return of the Chinese, who likely bought on their return of their New Year holidays, and then this move unfolded on Thursday and Friday. Really, that's a big move, and does it come in the framework of there's perhaps a bit of a wobble in the dollar coming, or those yields, or in the data, or and that's, we have seen this in the past. Okay, when Bitcoin started to move higher, and I'm not trading Bitcoin, and I'm not a fan of starting even to trade it, but you have to look at all assets at one stage, and when it started to fly, gold first came off, and then a big catch-up move. And we have seen such kind of moves in the past. And I've got somewhere the impression, because traders will be traders, book managers will be book managers. They had this big move in Bitcoin. Those who ran it say that perhaps, all right, this is it. This is really great, but there is always, and all those portfolio managers, those involved at least, they will always have some kind of diversification. And I've got the impression that gold is partially, this move is partially due to that. That like you may not want to have like to keep it simple, like 100% Bitcoin or other coins, but you want I don't know, 80% Bitcoin and then 5% of other stuff, and perhaps those 5% is that stuff that we've seen in gold. It does look like a gold move, as I've been saying last week, because silver only is only following from a distance, right? Silver did not put in such a big move at all. So it is definitely something that's happened. Gold in relation to something else. It's the yields coming off, sure. But it did go on its own if you look at, especially compared to everything FX as well.
Yeah, very much so. It is a bit of a strange one. I mean, you know, the Bitcoin move is big. I don't fully know how it pulls up into other assets. You know, Kay's mentioned one example there where, you know, investors and funds and whatnot got to have allocations set up. But yeah, it is a bit of a strange move. And when I don't understand moves, you know, sometimes I feel, well, I need to let it do its thing and until something becomes clearer in that. But yeah, potentially important move in yields coming down to that 420 level. Had a little nosy underneath it on Friday, but now we're just walking a tightrope, if you like. And I think this is going to be another one of those decider moves. If we finish the week above 420, then you know we're going to keep that strength that we saw in yields and keep that subtle bid in the dollar in against certain pairs anyway. But if we're below 420 and we're heading back down to the 4% level, then we're going to see the dollar under a bit of pressure. And that's when you'll probably get euro dollar up at 109s and whatnot.
And Ryan, zoom out a little on that tense, and you will see a bit further back that 437, 435. There.
Yeah.
You're far enough. You're looking at August, September of last year, then a little peak. Then we had the big spike up to 5%, and then on the way down again. There was that low and then a little bounce, and it's all happening in that 435, 440 area. And I think that's going to be really your important zone into this week on the top side. If that goes, then probably there's going to be dollar buying again. But if that continues to cap and we start to see those job related indicators flash a little bit more orange, there could be a bit more to the downside here.
Yeah, very much so. Very much so. Right, I'll have a quick look at Ali's dollar CAD. What's he fishing in today, Ali? What are you doing? Your long dollar CAD 35.76. It's coming a little bit tighter at first. So round about just up here. Yeah, we got the cap's really round 136. I've got this old trend line in. I like CAD likes it's a bit messy, but CAD likes longer term trend lines and stuff. It has a good record. This was a wedge I was looking at for ages and ages and ages. And it's got a bit messy of late. I probably could do with either taking out or adjusting it. But one thing with CAD, it does like a decent range. It does like playing between the levels. It does like respecting the techs, particularly. So we got a bit of a level up here, 136, 136, 20s, 30s, up into this area. Then we've got a big old level, 136.50, which has been a level going back. So your longs here, again, this one switches on and off with a epoxy oil trade. Sometimes it's trading oil, sometimes it's not. It's been more off than on the correlation with oil at the moment. As you can see, oil's been obviously moving up a bit, particularly on those OPEC lines over the weekend or late last week, where they've looks like OPEC Plus and all the lot are going to extend their production cuts. But it's not seen oil, rocketing higher. And that's not having too much of effect on dollar CAD. So for the moment, yeah, I think you may be all right with that one, Ali, but you got to get through that 136 area. Where's your TP? 136.06. Yeah, fair enough, I think. Yeah, my level here is at 50 fib on the downside, 135.38. So you can see it's been a bit of an area, and you've got your stop maybe a little bit too close, Ali. in my opinion. If I had a stop, I'll probably have it a bit more below that area, 135.38, because it's right bang on the level. But your trade, mate, as you always say, your trade, you know what it wants to do, you know what you want to do. So your levels come above mine. Okay, do you want to have a little look around?
Yeah, just a quick one today, to start
Yeah.
the week. I just one thing on this Canadian dollar. So many people are extremely bearish on Canadian dollar right now, and you could be right, but and it's not behaving too well with the rise in oil and gas. Yeah, because nat gas is coming back to the $2 line. Huh? It was looking a bit fragile around 1.5, but now we are nearly back at $2. So that's a nice pickup for those who did it. Okay, let me. But yeah, there's so many people bearish on the Canadian dollar for actually for this year. So yeah, we need to keep an eye on that. I would say especially if it would turn around and start to look a little more bid. Quick look on the yen. As usual, and and I've been saying that already a good number of times. We have a quick spike lowers, quick spike lowers, quick spike lowers, and then the thing creeps back up. That's the dollar yen. I think dollar is one thing, but I'll have a look at those crosses yen, because we're still in this kind of similar scenario. We have those quick setbacks, and then we come creeping back. On Friday, when those numbers in the States came out a bit weaker, I thought we had this setback then, right? And I thought, okay, I mean, there's a fair chance we opened the week and we stayed a week under 150, but then the Nikkei decided to rally again, and we know the correlation between Nikkei and yen. It's weighing on the yen, but still, where stuff like euro dollar, cable, even dollar Swiss before, into and after, just after the CPI was a little weaker and coming off the lows. I mean, dollar yen, we're already back there, and that still means that when you're long yen, you need to really take profits very, very rapidly. At least until, in my opinion, until we get those wage negotiation results, and that's going to be an interesting week next, because we are expecting a lot on around the 13th of March. So that is where we're probably going to see a break somewhere in dollar yen, but also yen crosses. And I'm not going to show all of them. But look at this euro yen. I mean, we had these move lower, these moves lower, right? Move lower. But every time we come back to levels where we left it before. So that to me means that unless the market is already long yen and they are not feeling too safe about it, and try to take profits. But it's still, we are going to need a serious catalyzer, again, those wages perhaps probably to get the market on board with this higher for longer in possibility in the yen. In the meantime, euro yen, and that was one because I thought it was very interesting. We had this move higher here. It's always done something around those high 161s. 161.80, 161.90 here. And then on Thursday, we had a quick move lower, but jumped straight away higher again. That's going to be a level, I think, for the sessions to come to keep an eye on. And perhaps even, if you look forward to next week, perhaps even see where we end up next week after we have news from those wage negotiations. At least, I'm going to keep a very, very close eye on, and then perhaps a confirmation if we get back down around the 161 or so. But and then here you've got another one around 160. But this is already going to be an important enough level to watch, in my opinion. Euro dollar completely stuck. It's hard to make it move, right? But as I was saying, I'm starting to find it very interesting, all those holds here. around 107.90, 108. And as we were talking earlier during our flow show, it does, and it's all still very, very conditional. And we are going to have a lot of data out this week. We are going to have the ECB out this week. But as Ryan always says, like, look where we are at the end of the week. If this is still above here at the end of the week, I think there's a fair chance that we maybe actually start to move higher. And very small, but I'm starting to trade it as if this one is going to hold actually. As I said, I'm keeping it risk very much contained. If it breaks, holds below, I'm going to be out. There's absolutely no problem with that, but it's very interesting and it's really starting to hold very well in my opinion. Another one is cable. We're still in that big triangle, but again here, I'm starting to wonder if 126, 125.90 is not our new 125 and a quarter. Remember, we had this same thing when we moved up from here. That levels, those step levels were showing up, and yeah, it's a bit volatile, but it's also holding. So that's another one that we may pay attention to, especially that we have the combination of that UK budget and all those US data this week. Okay, so this is going to be interesting. If we start to break above 127 by then, this will be around 2025 probably. We start to break above here, then I can see this continue to shoot higher. So as you can see, I mean, I'm starting to look at the other side because of those little orange flashing lights here and there in the US, and we know how the market can react if money managers start to rebalancing a little bit their books. It could unleash quite a few flows, and as we know, flows are what make a market move. So it's flows who are going to take it through the technical levels, and not technical levels dictate what flows are going to do. So if we get through there, that means probably that there are enough flows to take it through there. And then a hold, and then it should start to move higher. But
just before you flick off that one, mate,
yeah,
just to let people, while it's quiet today, keep an eye on 3 o'clock, the expiry time. We got just over 2.5 billion going off in cable, 125, 126, 50, 60, right about where we are now.
oh, okay.
Not often you see a big option expiry like that in the pound in cable. So just one of those, if everything else is moving and cable's not, if it's stuck around that area, then there might be something to get your teeth stuck into later on. Just one for the notice board.
Yep, thanks, Ryan. Let's have a look and then at what happens in that Swissy, because after the CPI, there was a bit of algo stuff going on. People saying, "Ah, it's a bit sticky," and Euro Swiss. I'm going to go on the tighter time frame to show the move better. So we had this. This is your morning move on the CPI, but then sorry, zooming back out, we had like a half-hearted retest of this channel around 95.5, and we're already bouncing, and we're already nearly back at that 95.90 zone. We had a quick peak above after the announcement that Jordan was throwing in the towel. On Friday, and then we had a setback on the pretty hefty setback on the US data, but it's holding, and that, as people know, is kind of my barometer to know whether the rest of the Swiss crosses still will be viable as well, because as I said very often now, it's kind of your it's their biggest trading partner as well still, although Switzerland exports to everywhere, but it's still a very big trading partner. And if that holds, that's still, in my opinion, overall positive for crosses or pairs against the Swiss franc. But dollar Swiss is a bit of a different affair, and I'm going to first look at what's happening on the long term. You see, that's already 2 weeks ago, 3 weeks ago. We started to talk about this cloud on the weekly. Yeah, we had a little look, and we stopped there. We had a little look inside, but we failed to close inside the cloud last week, and now we are hanging just below. And going back to the shorter end, the cloud is a bit far here. Right now, it's actually came down, so that's a bit far, but so I'm taking it out right now. And again, we had a look at that 80, 88, 85 figure zone, which I already encircled here a couple of times. The trend line is starting to water down, and that's the problem with trend lines coming to market. Instead of the market going to the trend line and then breaking it, it's more interesting to have horizontal levels perhaps at this time. But we need to respect what's happening up here, okay? And that may be your dollar giving you a little bit of a hint, saying like, well, I'm running out of steam here, okay? I guess there's been people playing this move and taking profit against that level because it is a very decent level. And again, we will see where we are at the end of the week, but keep this one in mind, okay? If ever in turn we start to close above, that will be inside as well of that weekly cloud. This could really push on, okay? But for as long as it doesn't do it, respect it. Dollar rand. Dimitris was asking about dollar rand. You know, been watching this. It held on a first retest. We did the bounce, but then kept again in those 30s. Okay, and this morning we went a little bit below. We're now trading relatively on the level. Am I buying it? Not right now, because there's all this all those dollar data coming out, Dimitris, this week, and I'm a little not worried, but I'm a little you know, hesitant on what's happening. Of course, if the dollar if the US data come out better, because we're all so data dependent, it's probably going to push back up. Okay. If in turn we get a little bit more orangey flags, this could actually come back to 75.80, 1875.80 before we reassess. Over here, I'm going to be interested. Oh, and over here as well, this zone here. I'm going to be interested to see how the market reacts there, because it could be a springboard to do the next leg. Okay. Yeah, exactly. But I'm with you. I don't think the rand is out of the woods by any means. You're saying you're playing more ZAR weakness than dollar strength. I know, but the thing is, if the dollar all of a sudden shows a little bit of weakness, well, then perhaps you could do something else against the ZAR. I don't know, Euro ZAR or Mexican ZAR, if you want to avoid to pay carry on that. Right. Anything else? There's one that I was mentioning as well. Okay, Aussie is still trying to figure out whether it's going for a break of here. I find the Kiwi behaving a little bit more hesitant also. It can't go to break zones to get back up. So we also had like weaker terms of trade in New Zealand early or late yesterday, early this morning for some. And we're pushing up against the 107 again in Aussie Kiwi. This one, I know a lot of people are trying to sell this here for the Aussie Kiwi to come back, and it is down. It's true that the yields in New Zealand are still higher than in Australia, but or didn't give us much to stick our teeth in the Kiwi dollar. And now those terms of trade coming data coming off. I wouldn't personally not be surprised we're going to have a look in the 107s before reassessing. But let's see. For the time being, it's still capped up there. And with that, Ryan, I'm going to give it back to you for today.
Thank you very much, mate. Right, well, that's hopefully got you all set up for the week ahead. Another congratulations to Main King for passing one of his, I assume it's a TFP one, your challenge account. So well done on that one, mate. Hope you take the real account to big fortunes and keep that discipline, mate. Don't let go after spending all that hard work passing the assessment. So good luck with that one. And for the rest of you, have a great week. Get yourselves ready to do battle with the markets this week. Going to be a busy one. So trade safe, trade well, and we'll catch up with everything tomorrow. Thank you very much, Kate. Cheers, guys.
Thanks, Ryan. Thanks, everybody.
Hey traders, this is Blake Morrow with ForexAnalytix. Thanks for stopping by our YouTube channel. Don't forget to like these videos, share them, and subscribe to our channel so you don't miss any of the content that we provide here for free. Thanks for stopping by. I'll see you in the next video.